chilling morning. Early morning is already free. But
This call is now being recorded.
surprisingly, I'm so happy so many students attended my lectures. Better than last week got 6, right? Today we got 12 students. So every week is increasing. Okay, good. So, so let y'all see your friends. Okay, just say hello to your friends there. Okay. All right. So, what you actually what's the name? Isaac? No. Kai Ting. Last week, you actually just hold it and can move around already. You know, never mind. All right. Today before I start today's class for the trial balance, this one is a trial balance and financial statement. Okay. So previously in the previous class, we have learned from lecture 3 until lecture 6 is all are the book of prime entry. Okay, we learn all the book of prime entry. That means in every transaction we enter to which is the book first prime entry. That means it's the first book we enter, and then we go to the ledgers. Okay, after ledgers, then now that one is episode 1 and 2. Now we go for episode 3. Okay, episode 3 is after we have posted the ledger, then we supposed to close the ledger every month end. Okay, then after that we will come up with this piece of information called trial balance. Okay, trial balance. Trial balance is look like something like that. Okay, so they have 2 columns only. So that you will post all the ledger closing balance to this trial balance. All right. So and then what is called trial? Trial that means try to see whether balance or not. Okay, the word is called why is whether that. So if your double entry is correct, that means you post your ledger correctly and you close your account correctly and you post it correctly to your trial balance, your debit side and your credit side should be balanced one. Okay? If not balanced means to say something wrong in your double entry or you're missing some figures. Okay, so today we'll learn how to draft out the trial balance. All right. After we have come up with a trial balance is all the items is sitting extract from the ledger. After we base on this trial balance, then we will come out a ledger account. Okay, not a ledger, a trial balance. The statement of financial positions and statement of profit and loss. We call it financial statement. Okay, so from the trial balance, okay, so let's say this is a trial balance. After we draw out, if this is the debit and credit is the same, then we will post it to the P&L account. Okay, we'll post it to the P&L account. We call it statement of profit and loss and statement of financial position. Okay, actually these 2 pieces of information we have learned it in your lecture 1. Remember when we do the accounting equations. Okay, so I told you that statement of profit and loss. Okay, is derived from what equation? Anyone can tell me what equation is that? Accounting equation or profit determination equation? It should be based on profit equation. Okay, so that means all your sales minus of all your expenses, you will get your profit. This is based on this equation, right? And now remember, let me recall your memory. Remember your lecture 1 that time. We have learned 2 equations, isn't it? One is this is a profit equation, isn't it? Then the other one is the accounting equation. Okay, so this is from your lecture 1 notes. So accounting equation is asset equals to equity plus liability. Okay, so this equation is for you to derive your financial statement of financial position. This one. Okay, so inside this statement now you only can see asset, equity, and liability.
It's actually online, can't see what you.
Oh yeah, because I did not note it. Thanks, this is the video, so then I have to move it.
Actually, you can just stop present and then you share the whole screen.
I don't want the whole share screen. Let's share the screen now. Okay. Yeah. Let's do we should go for mirror effect. I think that's it. Okay, thanks for Kai Ching just now remind. Okay, sorry, just now because I was still in the lecture 7 notes. So I just now I tell you is for the statement of profit and loss is based on this equation, profit equations. Okay, and for the financial positions, statement of financial position, this one is actually based on accounting equations. Okay, which is asset equals to equity and liability. Okay, so I expect you when in your assignment, okay, I really hope that you can do explain this referring to your statements. Okay, so to let your examiner or your markers or your tutors know that you actually can relate the accounting equations, the two equations to the statements. Okay, can all right. So now we revisit again to the to this. Okay, so today we're going to learn the trial balance and the two statements, the financial statements. All right. Okay, so come back to here, give you some idea. So today we will explain the relationship between the sales ledger and purchase ledger with the general ledgers. Okay, by now you should know what is sales ledger, what is purchase ledger, and what is general ledgers. Okay, and then the relationship between then how the GL posts it to the trial balance. All right, and then explain why the debit and credit of the trial balance should be tally, should be equals. And then you open all the opening and closing inventory, okay, in the trial balance, and then prepare the P&L and the SFFP. All right. Okay. Let's look at these ledgers. So the 7 book of account entry, assuming we have finished, you still remember what the 7 book of account entry are, you should know what are there are 5 journals, 2 books, sales journal, purchase journal, return hour journal, return invoice journal, general journal, cash book, and value cash book. All right, so you have to remember these 7. After you enter that, okay, so there will be those that the trade receivable and trade payable. Trade receivable you post to the sales ledger. Trade payables account you will post to the purchase ledger. All right, and then the trade payable control account and trade receivable control account you will post to the general ledgers. And of course the rest of like capital account, your assets account, all you post to the general ledger. Okay, and remember this general ledger is a main ledger that is a double entry. You have one debit account, then you have to have another side is credit side. All right, this one you should know. But for subsidiary ledger, that means this ledger and purchase ledger, they are single entry only. Okay, you post one, that you don't need to post the other side. All right. So this is so the subsidiary ledger or the sales and purchase ledger are from one of the double entry bookkeeping. Okay, so this one you may know, and the general ledger contain of the complete double entries are posted from books of prime entry, and therefore the general ledger contains the sets of the ledger in the accounting equation. Okay, so in the general ledger, you should balance when you okay, you got at debit side, you got credit side, you should balance one. All right, it will be we come up with this equations one. Okay, and the subsidiary ledger are controlled by the following ledgers in the general ledger. So the control account, trade receivable control account, is controlled by that means to say this one is to control your trade receivable sales ledger. Okay, the balance in the account represent the sum of the balances of the subsidiary account inside the sales ledger. All right, so remember I asked you when you have the sales ledger, you have at the end of the month you will close out all the subsidiary trade receivable balance. Okay, you have to come up with the sales ledger listing of trade receivable listing, individual one. Then check against this closing, but total closing against your control account. There should be balance punya. Okay, there should be the same one. All right, if not the same, that means something wrong with the answers already. All right. So and then same goes to the trade payable controller. Okay, so this one is to control your purchase ledger. Okay, purchase ledger. All right. So because purchase ledger is an individual, consists of many trade payable individual accounts, and so the control account is a summary. Okay, this is a control account. All right. So now the trial balance is at the end, as the general ledger contains a complete set of ledgers account, the trial balance is prepared from the general ledger. Okay, remember the trial balance is prepared from the general ledger. That means all the closing figure should come from the general ledgers. Okay, not the subsidiary ledgers. An account that will enter on the debit side of the general ledgers account are listed in the debit column in the trial balance. So when you close your account, all right, when you close your account, You brought forward, let's say your cash, right? Your cash accounts, is supposed balance CD is a credit side, but you brought forward is in the debit side. So the debit side will be posted in the debit column of your trial balance. All right. And the account that will enter into the credit side of the general ledgers, okay, like the liability or income or equity, they are listed in the credit column in the trial balance. All right. So based on the double entry principles of bookkeeping, for every debit entry, there is an equal credit entry. Okay, so they must be the same. And therefore, the amount of the debit in the trial balance should be equal. All right. Okay, another one is you need to take note is the closing inventory. The closing inventory of the accounting period are not, okay, highlight the word, are not found in the account in the general ledger because they can be found only by physical counting or from the inventory cards, okay? And therefore, the closing inventory are not found in the trial balance, okay? Take note on that. Okay, remember, I keep on telling students when you have a drawing of the inventory or you buy inventory, you never debit inventory, but you debit to purchases. Am I right? Okay, I said inventory you don't touch first because at the end of the month or end of the year, we will do one posting for our inventory. Okay, how to count, how to post the inventory? We are actually based on the physical count or from the inventory card. So that means I don't care how much I have in my stock, okay, during the month. But end of the month, I will go to my warehouse, count how many stock I have. Okay, so let's say I have 10 stocks. Okay, but when in my purchases record, I actually bought 100 units. Okay, but now my stock is at the warehouse is only 10 units. So meaning to say I just use the total purchase minus of my closing inventory that I know what is how much I sold my goods. It's 90 units. Okay, so that will be my cost of goods sold. Okay, understand? So we do not adjust anything in the inventory, but everything is adjusted through the inventory. Sorry, just through the purchases. Okay, we will not adjust through the inventory. Okay, and the closing inventory are usually provided as additional information. Okay, so when you prepare your financial statement, the question will give you the closing inventory figure in your additional information. Okay, this one you take note now. And the number 4 is opening inventory. Okay, however, the opening inventory are recorded in the general ledger. This one is recorded in the general ledger. Okay, are recorded. So what you see in your trial balance, there is the opening inventory, right? Then sometimes they don't tell you opening or closing, they just tell you inventory. So even though they didn't tell you it's opening or closing, you should know this is an opening. Okay, because closing would never show in your trial balance one. Okay, so understand. So the start of every period, therefore this is found in the trial balance. Okay, opening inventory will be found in your trial balance. Okay, but closing no. Okay, why opening? Yes, because the opening is for last month, so it's already posted. So therefore it's in your trial balance. But closing inventory no. All right. Okay, now we go for the note 5. Okay, financial statements. Okay, after we have come up with these trial balance and adjusted for the closing inventory and opening inventory, we go to financial statement. The financial statement are the end products of the accounts processes. Okay, end product that means everything we do so much thing is because we want to find this information. Okay, this piece of statements. They provide accounting information which are useful for user to make economic decision. Okay, so these are the ultimate aim. Okay, so when people ask you what is the objective for you to prepare accounting, actually the ultimate objective 最终的the final destination is to prepare the financial statement to let the user read it out and to make a economic decision. Economic decision that means to say whether you should go ahead with additional investment or this amount. All right, this is called economic decision. And they are prepared from the trial balance and the additional information regarding the closing inventory. All right. So they are basically at the level we only learn 2 statements of financial statement. One is called statement of profit or loss. Okay, profit or loss, statement of profit or loss. That means to say, you will learn. This statement will only capture all your revenue, all your sales, all your revenue, all your income and minus all your expenses, all your cost of goods sold, then you get your profits. Okay, so this statement is based on the profit equation. Okay, this is called profit equations. All right. And another statement is called statement of financial position. This statement, it shows as the financial position of the asset owned and the equity and liability owed by the business at the end of the accounting period. Okay, so the SOFP shows that shows the accounting equation. Okay, this one is based on the accounting equation, which is this statement of financial position only consists of asset, liability, and equity. You will not see any expenses there. Okay, you have to be very clear. Okay, I don't want in exam, I don't want student give me some expenses put inside the SOFP. If you put expenses or income in the SOFP, that means to say you totally do not understand this concept. Okay, so there are different things, don't mix up, all right? So this P&L is to capture profit and loss. This statement of SOFP, statement of financial position, is to capture asset, liability, and equity. Okay, everyone clear? All right. Okay, so now I think these formats of the two segments is already shown to you in lecture 1. Now I want you to revisit it again. Okay, so how this statements comes in? Okay, always remember for SOPL, okay, statement of profit and loss, always start with your sales figure or revenue figure. Sales, that means it's jualan. Must start, the first item must be jualan first. Okay, if there is a return inward, that means your customer return good to you, you have to minus from the return inwards. Okay, so remember, I go for some tutorial with students when they say the customer returns the goods to you when we sell to them, they return the goods to you. Some students give me the answer is they debit sales, credit trade receivable. You shouldn't debit sales, but you're supposed to debit return inwards. All right, because we will have, when we go to financial, when adjust this P&L at the time, there is a separate line for return inward to be minus. You're supposed to show separately. Okay, you cannot directly minus up from the sales. Understand or not? Okay, this is why you're supposed to debit return inward instead of debit to sales when you got returns from customer. All right, so you will minus out the ready, then you will get a net sales here. Okay, net sales in the last column. Okay, so this one is the net sales sections. Then you will follow by this section. Okay, this section. Okay, this section. This section is called cost of goods sold section. Cost of goods sold section. Okay, you will less cost of goods sold. Cost of goods sold is comprises of these few items only. Start with opening inventory. If the company have opening inventory, you will start with the opening inventory. You put the opening inventory in the second column, all right? And then you will have added, okay, you will have purchases. Okay, that means this is a stock from last month. That means you haven't sold yet. Okay, you bought for this month, this year. And then this one is this purchases is this year purchases. I bought in so much. All right. Then if I have returned if I got return outward, that means I need to net off because I return good to my customer, a supplier, my payable, I need to minus. Then I will get a net purchases. This is my purchase cost only. Okay. Now I will add in other costs like what? If let's say I actually carriage inwards or wages relating to this purchases. Okay, so it will be part of my purchases cost. Okay, so you need to add these two items into your purchases stack as part of your purchases cost. Okay, let's say I buy my purchases this year is 1,000. I return good to my supplier $100. So 1,000 minus $100, I get 900 net purchases. Then on top of that, my supplier also charge me some carriage inwards. Let's say they charge me 50 ringgit carriage inwards. So 900 plus 50 is 950. All right. And the wages also employ some wages to handle my stock, another 50 ringgit. So 950 plus 50 is 1,000. So my actual purchase is 1,000. All right. So I need to add the opening inventory with my purchases to find how much stock actually available for me to sell. All right. So opening inventory plus the purchase cost. Then I get this subtotal first. Then I minus closing inventory. Okay, why am I to minus closing inventory? Okay, let's say opening I have 10 units. Now I buy 100 units, so it's 110 units. All right. So, but I need to know how much sales, how many units I have sold. Then I very simple. I just want to find how much I left. Right now, closing inventory is how much I left in my warehouse. Let's say just now opening stock is 110 units. Okay, and the purchases is 100 units. Total I got 10 unit and 100 is 110 units. So let's say my closing inventory I got 20 units. So how much I have sold is 90 units, right? Okay, so the 90 unit will be my cost of goods sold. Okay, it will be my cost of goods sold, right? So this cost of goods sold, that means, remember what is cost of goods sold? The cost, the unit sold times what? Times selling price on time cost. Remember in the previous tutorial, I told you differentiate between sales and cost of goods sold. Cost of goods sold is the unit sold times cost. Okay, so this one, after you minus the closing inventory, you will get cost of goods sold. All right. So why we want to find cost of goods sold? Because we want to find gross profit. How to find gross profit? Use your sales, okay, the sales for the year minus the cost of goods sold, you will get gross profit. Okay, so this part is a lot of students get confused on that. Okay, so you have to understand why this is come about. Okay, cost of goods sold is start from opening inventory plus all your purchases minus your return hour if there is any. Okay, and if there is any additional cost, you have to add it. Okay, and then you minus your closing inventory, then you will get your cost of goods sold. All right. So after you get cost of goods sold, you get your gross profit. After you get gross profit, you have to add in other income. Other income means to say other than your sales. All the income other than your sales is already entered on top, right? So like the other income will be a discount received, rental income, or rent, bank interest received, all this. Okay, you will enter to here. Then you will come to here. Okay, this is the total other income. You will add your gross profit with your other income. You will get total income here. And then if you have other expenses other than cost of goods sold, right, those salaries are carried outwards, discount or not, blah blah blah, then you come under here. Okay, then only you get your net profits. Okay, so this statement understand? So next will be the financial position. Financial position is very straightforward. Okay, statement of financial position. You will list out all your non-current assets. Then you will have a current asset. Okay. So after you list all the non-current assets like the building, machines, machinery, office equipment, motor vehicles, all add up together, you get the subtotals. And then current asset, you will have some inventory, trade receivable, fixed deposit, bank, cash, all then you get this. Okay. Then after that, you get total here. So the equity, okay, after that, you will follow by the equity and the non-current liability and current liability. Okay, so you have a total on that. So the equity always start with the capital, opening capital. If there is additional capital, you add it in, and then you minus, add or minus your, normally it's add is a profit. This profit figure is part of your equity, so you will transfer to here later. Okay, this one, you post to here, and then minus the drawings, then you will get your capital, so closing capital. Okay, and you add in the long-term or non-current liability and current liability, you will get your totals. Okay, so these are the statements. So you can see from here, there's no expenses or income here. Only one figure is net profit ledger. Okay, and in this statement, you cannot see any asset, liability, and equity. Okay, they are the statement capture different items. Okay, what is important is some students tell me, teacher, actually until now, I still do not know what is asset all. Then you go and study again. If you still don't know what is asset, liability, or you don't know what is expenses or income, then you have to go and do your revisions. Okay, now we do our illustrations. Okay, are you ready? So far, any questions? Okay, I think I go very slowly. Okay, I understand. For those that have already learned accounts, sorry. But those who are, I also have to cater for some of the students, it's a science stream student that did not do not have accounting knowledge, so I have to go slowly a bit. All right. Okay. Let's look at the illustration 1. The following list is extracted from the Mohan Trading Journal ledgers. Okay, so they extract it from the journal ledgers. Okay, they close it and then they just list down only. Okay, they just list down only without differentiate debit side or credit side. So you can pandai. You have to know this asset is supposed to debit side or credit side. Okay, and then and then this one, because it's not a trial balance yet, this is a listing, and then they give you opening inventory also. This is how much, and required to ask you to do a trial balance for your trading as a 31st December and find the amount of owing. Okay, so you can use this. If you do not know your capital account, you can use a trial balance to help you to find your capital amount. All right. So let's do it one by one. So building is a asset or liability. Asset, right? Asset is debit or credit, It's a debit side, right? So you transfer the 35,000 to your debit side. So you will have to open this, then you fill in your building and put in there. Okay. So since the first item, this computer gave me is inventory at 1st January. I think it's opening inventory, and this one is given is here. All right. So I will transfer this to the opening inventory is an asset, so you will go to the debit side, 21950. All right. Next one is motor vehicle, office equipment, 20,000. Okay, so this one is also an asset. It's a non-current asset, so you put under debit side. Next one is a motor vehicle, 60,000. Okay, so it's also debit side, so you just transfer that, very easy. Next one is a trial balance, trade receivable. Okay, the other one is cash out. This one, closing inventory. This one, debit side or credit side? Or you should not enter your account. You should not. So this one you have to be very careful. Okay, write a note here. This one cannot go to trial balance. Okay, cannot go to trial balance. No. Okay, no entry. No. Just cross it, says that this one is cannot go to trial balance. All right, remember that. Closing inventory cannot go to trial balance. And next one, trade receivable. Trade receivable is your current asset. Okay, it's a current asset. It will go to the debit column. All right. And next one is a bank. Okay, so bank is 18,000. Is your current asset. Will go to debit column. And cash is a current asset. Go to the debit column. 6,150. And petty cash is also a cash. Okay, it's handled by another person. It's a very small petty cash. Okay, it's also a current asset. And trade payable. Trade payable is asset liability. It's a liability, right? So it's a current liability. So it will go to your credit side. And same goes to other payables. Okay, 10,000 credit side. Bank overdraft. Okay, bank overdraft will be credit side. Okay. So some students may ask me, teacher, how can you have a bank balance at the same time for bank overdraft? Cannot have bank balance also have bank overdraft. Boleh punya, because you got different bank. Okay, so some bank you got money there, some bank you get facility. Cannot. All right. Drawing is part of your equity, right? Equity is supposed to be credit side, but drawing is debit or credit? Debit. Yeah, it's debit. All right. So drawing you go to the debit side. 14,000. And then the loan is a non-current liability. Okay, so it will be a credit column. Sales is what? This is what? This is a revenue, isn't it? It's an income, it's a C. Yeah, it's a credit. Okay, it's a credit. All right, so it's how much? 475,000. All right. Purchases is part of your cost of goods sold, so it's an expenses. Okay, so it will be in debit side, 400,000. And carriage inward is an expenses as well. It's part of your cost of goods sold. It's an expenses as well. So it will be in the debit side also, 5,600. Right? Discount received is the income, right? You receive income from your supplier is income. Income is a credit, okay? Okay, it's like sales, okay? It's the income, all right? 3,000. Discount allowed is you give discount to your customer, okay? You give to your customer is the expenses. Expenses is the debit. So we put the debit column. And next one is telephone. Telephone is an expenses. Now remember, okay, as all expenses should be debit side here. Okay, 2005. Office rent, 12,000 also debit side because it's an expenses. And the last one is salary. Okay, salary is a gaji. Yeah? Gaji is an expenses. Also 31,000 is tax. All right. So now, okay, but capital is a question mark, okay? But we know that capital is what lah? Capital is equity, right? Equity should be in the credit side. So, but we do not know this figure, and the question asks you go and find it yourself, okay? So you have to total up the debit side. Everyone, can you help me to total? Then you tell me, type it in your chat box. Those who at home one, those here one, okay? You can type or you can shout your number for me. Anyone? Okay, you do that. Total of the debit side first, because we know that credit side we have a missing figure for capital. Okay, so you will have the debit side. And everyone help me. What is? I see the mosquito. I just grabbed that one already. So many mosquitoes. Oh, what's the figure?
661,700.
Very good. Okay. Yeah, 6. So we know that it's 661,700, right? So we know that, okay, debit side is supposed to be same as credit side. Okay, fine, right? If they give you the credit capital, the capital should be tied back to that. Okay, now, but because capital is a missing figure, so no choice. We know that this debit side should be credit, same as credit side, right? So we also put this 661,700 here, and then we go backward and find out. Okay, use this 661 minus all your credit item here to find out what is your capital amount. Can you find me what is the capital amount?
Actually, your trade level is 18,000.
Which one? Oh, this one, 18,500. Okay, thank you. Okay, let me know when I key wrong figure, because when I call top, sometimes I will key some wrong figure. Wrong, then let me know. Okay. So what is your capital amount? Yes, 118800. Con bò ông kẹt. Correct. 102,150. Okay. 102,150. Top. Okay. Okay, how you get 118850 eh? Come on, now you got. I will check your answer and get. Okay, so this is how we can use the trial balance to find the capital figures. Okay, assuming this one is assuming our data entry is correct, lah. All right. Okay. So far okay. Now this is okay. Now we go for illustration 2. Okay, illustration 2 is more. They give you the trial balance. Then they ask you to come up with a trading, a P&L, and a financial position, and a trading account. Actually, trading account is the same as it's part of your P&L account. Okay, I'll explain to you later. Okay, that's the illustration 2. The following balances are extracted from Mr. Edward's ledgers. Okay, so this one is from his ledger, and then this round they give you the trial balance. Okay, they give you the full trial balance with the capital also. Okay, that means to say, that means the ledger is correct and they posted correctly here already. Now they give you the additional information regarding your inventory, and they also give you some adjustment on your additional capitals, and also the petty cash. Okay, how to maintain petty cash. So the requirement asks you to prepare trading account, and then next is part B is asked you to prepare SOPL, statement of profit and loss, and C is asked you to prepare the statement of financial position. Okay. Okay, here actually the trading account, even though did not ask you to open trading account, when you prepare your SOPL, there will be part of it. Okay, actually look at here, this section, the sales until gross profit. This one is a trading account. Okay, so here we ask you to open trading account because we want students to aware that what is trading account. Okay, trading account is sales minus cost of goods sold plus purchases, then minus closing inventory, you get gross profit. Okay, these are the format. Okay, it's part of your P&L. All right. So sometimes in the exam, they may not ask you to open the full P&L, full SOPL. They will just ask you to open the trading account. That's why you need to know what is trading account. All right. So start from here. First of all, so trading account, you have to remember the format. Now you cannot simply do your own format. Okay. So sales, we have this sales, okay? Sales is 45,000, all right? So we put this sales figure to our trading account, 45,000, all right? Post this that. Okay, once you post it, you can just highlight in the, you just take it off or you highlight in the other color so that you know that because every figures are, what I mean? Okay, every figure you posted already, then you will not post second time. All right. So opening inventory, we can find opening inventory. This is 5,000. Okay, so this 5,000 you will post to here. It's part of your cost of goods sold. And then next one, after the opening inventory, you have to add in the purchases. Okay, if you have written inwards, okay, your purchases will be in the first column. But in our case here, you just glance through here, there is no purchases. Okay, no returns outwards. Okay, no returns outward. That means to say you do not need to adjust your purchases. Then you can put your purchases into the second column. All right. So it's 25,000. I think 25,000. Okay, so this purchases is from here. And then you get a total of 30,000. Okay, and this is a total stock available for you to sell. Opening plus the purchases is a total available purchase value that you have available to sell. But now you have to find the closing inventory. Okay, where can you find the closing inventory? You can never find your closing inventory in your trial balance, but it will be in your additional information here. Okay, additional information here, closing inventory. Okay, so how much is that? 6,000. All right, so you will minus closing inventory. Negative or bracket or negative also can. Okay, doesn't matter. So long you need to know it's minus. All right. Some students say, teacher, I don't want to put minus or bracket. Can or not? Can. But remember, if you don't put, you must put left here. All right, then make sure it's the net up here. Your cost of goods sold is how much? You use your total purchases here minus your cost of closing inventory. You will get your cost of goods sold. It's 24,000. And I actually highly recommend students to put bracket here. You minus this already, you put bracket because you must use your sales minus your cost of goods sold because it's the last cost of goods sold, isn't it? So why I want you to put bracket? Because in exam, students, sometimes you put 24,000, you forgot you're going to add it. All right, so it's good for you to bracket, then you remember this is minus. So your 45,000 sales minus your cost of goods sold 24,000, you will get your gross profit 21,000. Okay, so if the question only asks you to prepare trading account, meaning to say you will just do this part will do. Okay, understand? So if the question asks you to prepare a statement of financial, statement of profit and loss, Then you will do this. Okay, that means you will continue from your trading account. You will continue from here. Okay, so I want you to transfer this figure again to your SOPL because the trading account is part of your SOPL. So can you do one more transfer all this figure to here again? Okay, can you do that? We already done that just now. Okay, so it's the same. 5,000, 25,000, 30,000, minus 6,000. So normally the question is either they ask you to do trading account or they ask you to do SOPL. Okay, they will not ask you to do both one. Okay, this one is just for illustration purpose. Okay, so same this one summer everything is the same so I transfer the figure to get until gross profit. All right, so this part is called trading account. All right, but we in SOPL we will continue. Okay, continue from the trading. So we will have so we know that there is an income, so we have to go through here. Okay, so any incomes here not? Okay, income, commission received is an income 1,000. Okay, we have to add this 1,000 as other income. All right, commission received. Then, okay, in exam they will not give you the list item. Okay, so you need to follow the sequence. If you do not know, you just leave a few blank and then if you then you continue with the expenditure. All right. So okay, let's just do one by one. Insurance. Insurance is expense or income. It's an expenses because it's a debit side. Okay, we just transfer it. Okay, we go to the expenditure there. Okay, 500. And then wages and salary. Okay, look at it now. Wages, if they did not break up for you for this wages and salary, you will all charge it to expenses, normal expenditure. If they split wages and salary in different line, then wages will go to the cost of goods sold. You add to your purchases cost. The salary you go to the normal expenditure. Okay, but if they lump up together, you all charge the normal expenditure. Yeah, so this 3,000 you will go to the normal expenditure will do. Okay, and then commission is an expenses. Okay, 1,100. Next one is what? 1,000. Rent and utility. All these three also is an expenses. Rental, utility, interest. Interest is debit side one is the expenses. So all these three also is expenses. So just transfer it to expenses. Okay, 2,004 and 1,650 and 850. All right. So all this is from here. And we continue. Continue interest received. Rent received is 2. Okay, this one is in the credit side. We know that this one is income. Sometimes the question is very tricky. They do not give you in receipt, rent received or what. They just put credit side. But you need to know if credit side interest or rent is an income to you. All right, so this 2 is an income. So you have to put under income here. 1,500 and 3,000. All right, so we just go through the rest. The rest I think like this one, land building fixtures, other receivable, value cash, all these are not income and expenses. All right, so we do not need to post it here. All right, so finish already. Then we total up. What is the total income? Total income 1,000 plus 1,005 plus 2,000. You should get 4,005, right? Okay, then you add in with you plus together with your gross profit. Gross profit add with your income. You should get 25,500. Okay, and then you minus all your expenditure, total of all your expenditure. Okay, you check my figures. If not wrong, you tell me. It's 9,005. You get 9,005. Double check, please. All right. So you get your net profit. How much is your net profit? Very good, 16,000. All right, 16,000. Okay, and you know that this 16,000 is part of your equity. Okay, so we know that this equity will be sitting in your equity side. Okay, you immediately transfer, if you already draft out it, immediately transfer this 16,000 here. Okay, this 16,000 will be part of your equity here. And transfer that. Okay. Okay, now we finish P&L already. We move on, continue, not finish. So it's the SOFP. SOPFP. Okay, remember SOFP is spent out with your non-current asset. Then have a current asset, right? And you will have some, you will have equity, non-current liability, and current liability sections. So in exam, you will just try out this first, the rest, you don't know what is that, you just leave it blank. Okay, and when you have, then you just fill it. Okay, now we go for the first one, land and building 48,000. Okay, motor vehicle, furniture, fixture and fitting, furniture, office equipment. All these 5 items are what? Are your balance sheet item. Okay, are your non-current asset. Okay, it's a non-current asset. So can you transfer all these 5 assets, non-current asset, to your non-current asset sections? Okay, 48,000, 10,000. What is hanging? You feel like my screen is hanging. 10,000, 4,000, 3,005, and 2,000. Okay, this one is before we do any depreciation. This is very simple. Okay, after we have get this total asset, can you tell me how much is the total non-current asset? Total is how much?
67,500.
Very good, 67,500. All right. Okay, now we continue. There is the continue is a trade receivable, other receivable, also non-current asset. Bank, public bank. Okay, it's a non-current asset. Current asset. Cash is current asset. Valid cash is current asset. Okay, so highlight this, or this one is all is a current asset. Okay, so same things, you will transfer this to the current asset section. Okay, before we have transferred this, we have to take note on some additional information. Go back to the additional information first. Okay, first information is a closing inventory. All right, so this 6,000 we have to enter 2 places. Remember all the additional information figure given. All right, must enter to 2 places. Okay, so this 6,000 okay, one time is already settled here, right? It's already entered to here. Okay, use another color. This one, all right. It will be inside your closing here, and this one 6,000 is also part of your current asset. Remember that? Okay, so this 6,000 closing inventory you have to put in first. All right, 6,000 is from your here. It's from here. And next one, they say what? During the year, Mr. Albert's father gave him 10,000 as additional capital. The money was banked into the business bank account with public bank. Okay, public bank. But this transaction was not recorded. Not recorded yet. Okay, that means to say you need to put in the double entry. May I know what is the double entry if the owner gives additional capital? Debit where and credit where? Debit. Read through this again, everyone. During the year, Mr. Edward's father gave him 10,000 as additional capital. The money was banked into the bank account. Okay, with the public bank. So what is the double entry here? Debit bank.
Bank.
Credit. Yeah, very
Credit
good.
capital.
Yeah, very good. Oh, got someone. Thank you. If don't get, I cannot. I notice you have answered. Okay, debit bank, credit capital. Okay, if debit bank, my bank should be increase or decrease. This public bank increase. Okay, so take note. It will be increase. So my public bank, you have the adjustment. Okay, 5,005 plus 10,000. Okay, you add first. Okay, you don't put because that's one more adjustment for the bank. All right, and for the capital is how much? I put bank here, I put adjustment here. Public bank, you need to add 10,000 later on. Okay. And the other one is capital. Capital, you also need to add in 10,000 because you credit your capital, you will increase your capital 10,000. Okay, we put here to remind us later we need to adjust 10,000. 10,000. Okay, so this is the first adjustment. And the second adjustment, the third here, Inject Edward maintain a better cash flow of 800. Okay, cash flow. Now you already study, go through your tutorial 6, you know what is petty cash flow. That means every month and okay, you will give back the or top up the original amount of the petty cash flow. With which it reimbursed every month, and this reimbursement on 31st December has not been recorded yet. That means to say they already give the petty cash reimbursement but haven't top up yet. Okay, haven't reflect yet. So you look at your petty cash here. How much is your petty cash? The petty cash here is it's only 100. It's only 100. So, but the float is 700. It's 800. So the minute they say you need to transfer, top up 700 to the petty cash so that it's back to 800 petty cash flow. Okay. So what will be the double entry? You will transfer from where and to where? You will debit petty cash and credit to bank. Okay, cash or bank. Okay, so we will just put, you can put cash or bank. Okay, so my suggested answer here, they put bank, so I will just put bank. Reimburse has not been, they did not tell us reimburse to the cash or bank, so you can either credit to your cash or your bank, doesn't matter. Okay, so I will credit to my bank. So I debit my petty cash, and credit to bank. You want the credit cash also can? Okay, you can just minus to your cash. Okay, so here you will update here 700 at your petty cash 700 and minus from your bank 700. Okay, so this is the adjustment that we need to make before we transfer this petty cash and cash to our financial statement. And so now you can start transferring here. Trade receivable, how much is that? 13,500. Okay, other receivable, no adjustment now. It's 4,500. You just put 4,500. And public bank got adjustment now because previously is before adjustment is 5,500. Now you have to add in the 10,000 additional capital minus the 700 petty cash transfer to that. Okay, so you should get your bank how much? 14,800. Okay, but some students say I don't want. Can I not to minus from bank? I want to minus from cash. For that, can, because the question never tells that reimburse from cash or bank. Okay, can. So the cash is 3,000. So since I already reimbursed from bank, so my cash no changes. I just minus 3,000 from cash. Okay, I just transfer the cash 3,000. All right, and the petty cash. Okay, now from 100, now add in the 700, so it become 800. Okay, so these two got difference, got adjustment now. All right, so Drawing is not a current asset, so no need. So now we have finished transfer all your current asset with the adjustment already. How much is the total current asset here? You should get 42,600. Do you get 42,600, everyone? Yes, huh? Okay, now you add the current asset with your non-current asset. What is your total asset figures?
1101.
Okay, 110100. Very good. Okay. Okay, we've done the top part. Now we continue with the bottom part, which is equity. Okay, equity, we will start with the addition capital first. So from the from your trial balance, we look for the capital. Okay, capital before that is 49,000. Okay, you put in the original capital first is 49,000. Then during the year, they top up 10,000, isn't it? Because the Edwards brothers give him 10,000. Okay, this one is called additional capital, 10,000. Okay, so total is 59,000. All right, after that, we have to add in the net profit. Okay, this net profit is from your SOPL. Okay, so add in is you will get 75,000.
Actually, for the capital, isn't it
Isn't it what?
the capital on at the capital from there, isn't it for the 31st of when?
31st January, this one.
Yeah, the 49,000 isn't it for the
31st January. What do you mean? It's 1st of January. This one? Beginning one? This one is before, this 49,000 is not in yet. It's not take up of the 10,000 yet. Not yet. Then here they say one. Question says the mutual maintain the the 10,000 as additional capital, and the money was back into the bank with the Rapid Bank, and this transaction has not recorded. That's why you debit your bank, credit your capital. Right? Okay, so means to say the 10,000 is not inside this 49,000 yet. Okay. Okay, therefore you got this double entry, yeah. All right, so you debit, you credit your capital, further increase your capital by 10,000. So this is a closing 59. Okay, after the additional capital. What do you mean? What's wrong with it? What's the period?
Actually, what I mean is like for all this, isn't it? All this, the figure is for the 31st January.
Oh, okay. This figure, Kaiji answer the question is, isn't it all this for the 1st December? Yes, except for the capital, because the capital normally we brought forward like opening inventory, we brought forward from last year, haven't ended anything. So this capital also the same. Okay, we haven't ended anything yet. Okay, we brought forward the last year. Okay, so it's even as the 31st December, but it brought from the last year. Okay, if there's no additional capital, that one will be your closing capital. But because this during the year they have additional capital, therefore that you will or that means you say why this is first. Why put okay, because we want if you don't want to put 31st December also can, but people will confuse. This one is one closing of additional closing. Okay, so if you don't want, you can just leave it. Okay, just capital. Okay, I put the 1st of January is because I assuming that this one is from last year. Okay, no any adjustment yet. All right, understand or not? Okay, he confused with this word 1st of January because all the balance is as at 31st December. But normally we presented this based on opening balance, okay, and then we add in, then this is a closing. So if I put the 31st January here, then this is also the 31st December. Then we'll be very confused. Then they ask me why you got 31st December. Okay, so understand? So because here this is only at the month, this is at the closing. All right. So opening 49 plus 10,000, okay, additional, add in the net profit. Then you get to minus your drawing. That is a drawing here. Okay, everyone, drawing is a minus, therefore it's a debit side. So this one you will credit to minus it, 9,000. Okay, I'll go to the total. How much is this? 75,000. So your 75,000 minus the 9,000, you get the closing. Now only you put the capital as at 31st December. All right, 66,000. Okay, so if I put this 31st December on here, then you will be very confused because it's not final yet. I cannot put on the 31st December. It's still got adjustment there. Okay, therefore I cannot put the 31st December. Okay, I will put the 31st December here. Okay, I understand, All right. Okay, after you finish the equity, then you can go back to your trial balance to look for other things like your bank loan, and mortgage loan. Normally, these two are the non-current liability. All right, so you put under the non-current liability then 7,500 and 16,500. Okay, so you will get a total of 24,000 for your total non-current asset. And next one is the rest. Okay, the last three items, trade payables, other payable, and bank, main bank. Okay, this one is a bank overdraft. Why we know it's bank overdraft? Because don't only see the bank here. Okay, you need to see the balance is at the debit side or credit side. The bank balance 6,600 is sitting in your credit side. Means this one is your bank overdraft. Okay, so it's your liability, it's a current liability. Okay, so you will transfer this to your current liability then, 1,000, 6,000. Okay, so you total up your your current liability, you should get 20,100. Okay, after that you total up this subtotal of the three balances from equity, non-current liability, and current liability. You should get 110,100. Okay, 110,100. If you cannot get, there's something wrong with your answer. Okay, to check your answer, every time you check, is see whether all your figures has been transferred. After you transfer, you take, then you should not miss anything. Okay, then you can find it. Can or not? Okay. So far okay, Now we will go for another illustration. This illustration is a very long illustration, okay? It's to show you how you close your ledger, and then from your ledger, how to post it to your trial balance, okay? And then from your trial balance, they teach you how to, they ask you to close it now. Okay? Yeah. From the trial balance, then they'll ask you to post it to your SOFP and SOPR. All right. Okay, right? Oh, long. Okay, everyone ready? Illustration 3. Okay, this one you can this illustration 3 will let you see the pattern how the flows comes in. All right, how the flows of the entry. Okay, Shanna started the Puyo souvenir shops operate on 1st March. Okay. And with the 1,500 cash and 10,500 in Aeon Bank current account, the foreign transactions are occurred during the year. Okay, highlight this. This is information you need to pick up. All right. So meaning to say, Shana actually pumped in the capital to start up his business. All right. So the requirement part, they ask you to open the T account. Okay, in where? In which ledger? This one is a general ledger. Okay, even the question never tell you. If in general ledger, you know that all this T account should be in a general ledger. All right. And then they ask you to prepare a trial balance. and then prepare a SOPL and SOFP. All right, so now we do one by one, okay? Okay, so what is a double entry? For us to enter these two capitals, or these two cash 1,500 and bank 10,500, it was supposed to debit. So here we assuming there is no cash book. Okay, we straight away go to the ledger. Okay, so the cash book is leave it. Okay, so we assuming that this company do not have cash book, but they open straight away to the cash and bank account. All right. So on 1st of March, okay, enter that. You enter your cash. Cash account is how much? 1,500. And credit to where? Credit to capital, isn't it? So you have in the particular here, you have to put capital, and then you have to open a capital account here. First March, cash 1,500. Okay, this is the first one, and the second one is a bank. Okay, you also channel also bank in some 10,500 to the bank, Aeon Bank. Okay, then so you enter debit to your bank account 10,500 on 1st March, and the particular you put capital because you're going to post this to capital account. Okay, it's for capital purpose. So you know, open a capital account first. This one you put bank. Okay. Why I want to highlight this? Because students last time I got one similar questions come up in your final exam. Students, wow, they see this, then they jump directly to here. They did not see the top header, then they miss out this part. Okay, so then they complain the question got problem. All right. So I want you to highlight this. Okay, 2nd March, she bought office equipment for 1,000 paid by check. Okay, paid by check. Office equipment and check. Okay, office equipment is your is debit. Okay, you debit your office equipment 1st March here, and you use check to pay. Then so it's bank or debit office equipment credit to your bank account. Right? How much? 1,000. 1,000. And credit to your bank. Office equipment. Right. So this round our double entry we do not use journal entry, but we use ledger to post it. All right. 4th of March, purchase 50 units of goods at 2,000 each from Grace Enterprise on credit terms. Okay, so this one is what? Is a purchase on credit. Okay, purchases on credit. So you will debit to purchases and credit to. Okay, here. What I missed March 2 is not. Oh, okay, thank you. Student very sharp in finding picture error. I purposely want, okay, Yongzhen, so that I keep your alert to monitor me. Okay, 4th of March, okay, so that there's a purchase on credit. Debit purchases, then credit to Grace Enterprise is supposed to go to your purchase journal and purchase ledger, right? But assuming that we ignore that, okay, we just post it to the Grace accounts, trade payable Grace accounts. Okay, so you debit purchases here. 4th of March. Okay, so here you just put trade payable. Okay, Grace. Okay, by right is trade payable control. Okay, we just put trade payable. So now we assume we do not have purchase ledger. Okay, we do not have a purchase ledger to control that. No trade payable control. So we just post it to the trade payable Grace account. All right. So it's how much? How much is that? They say the purchases is 50 50 units times 200 each, so you have to 50 times 200 is how much? The purchases should be 10,000, am I right? Can you calculate 50 times 200 is how much? It's 10,000, right? Okay, so you debit purchases and you credit to Grace here. And here you put traders. All right. Okay, next one. 7. Early settlement by check of the above purchase from Grace, and the price was made at the cash discount of 10,000. So you pay Grace, okay, early, and then you enjoy cash discount 10%. All right. So you're going to pay Grace, debit Grace, and credit to your bank. Okay. So debit Grace, how much? Okay. We pay first. How much is it? 7. How much you gonna pay Grace? If we suppose we owe Grace 10,000, but we enjoy 10% discount. 10% of 10,000 is 1,000. So meaning to say we only need to pay Grace 900 only, right? 9,000 only, right? So you put trade payable Grace, credit your bank, Grace 9,000, and then you debit Grace 9,000 first. All right. Settle the payment. 7, and this one you put bank. And then we also have to enter the discount, okay? So because we need to reverse the 10,000, so the discount allowed is debit. What is the double entry for discount received from Grace? We have to debit Grace and credit to discount received. Okay, credit to discount received. Okay, debit here and credit here. 7, payable Grace, right? So we have one discount. Not discount receipt. 1,000. Okay, this one done. So remember if you have received discount receipt, you have to enter 2 places. One is you have to credit your bank, debit Grace first, 9,000, and the other one is you have to credit your discount receipt and debit Grace. So in total, Grace should be you're supposed to debit Grace 10,000, but in different line. All right, can remember this. Okay, finish number 7. Now we go for 8. It must put in additional capital of 1,000 into the business bank current account after she won the money in the contest. So this one is additional information, additional capital. You will debit bank. Okay, they put it on the current account. So the current account is bank account. How much? 1,000. Okay, you debit 1,000 into the bank and credit to the capital. Not too much. Capital. And in capital, you have to put in it not too much. One is bank. And this 1,000. All right. Okay, so this is only one entry. Now we will continue on 9 of March. 9 of March is we sold 8 units of goods for 400 each to customer on cash term. Okay, all the sales proceeds were banked in the next day. Okay, this one, this question very tricky, okay, on cash terms, and then they bank in next day. That means to say you have to do 2 entries here. All right. So first of all, you have to debit cash, credit sales because it's a cash term. All right. So you will debit. How much? The sales is how much? 3,200. 3,200. This is 9 of March. You put sales first, okay? Petty cash, and then you open another account for sales account here. 9 of March. Alright, here you put cash first. And then it's 3,002. Alright, first thing. Now after that, they say that next day, okay, that means on 10th of March, you can transfer this 3,002 to bank. Alright, so you will have to credit your cash and debit to your bank like a contract. Okay, so it's on next day, 10th of March. You will credit your cash and debit to your bank. Then 3,002. Debit to here. Okay, so this one, that's why a lot of students they did not see this. Okay, they straight away put cash to bank, only debit cash credit sales started. They did not transfer to the bank. All right. Okay, on 11 March, okay, obtain a 50,000 bank loan from Aeon Bank, which was immediately banked in. Okay, so it's a bank loan and immediately bank on the day. Okay, so you will debit your bank immediately and credit to your bank loan. Okay, on 11. Here you put loan, or bank loan also can, loan or bank loan doesn't matter. Okay, 50,000. And then you go to open a bank loan account. Okay, Aeon bank loan account here, credit side. 50,000. Okay, so March back. Anna. Okay, after we have entered the loan, Aeon loan, then we'll go for a 12. Pay advertising expenses 3,000 to Sao Hong Media by check. Okay, by check means by bank. Okay, you will credit your bank 3,000 and debit to Sao Hong Trading. No need to Sao Hong Trading. Just pay it to expenses. Directly go to the expenses because you didn't owe Sao Hong. You pay immediately for these expenses. Okay, so you will credit your bank on 12 and you directly debiting to the advertising. Okay, advertisement or advertising expenses. How much is advertising? 3,000. Okay, you credit your bank and debit to advertising expenses. 3,000. Okay, so we debit expenses and advertising expenses. All right, we need 12, then we will go for 14. 14 is about a delivery rank from Amrita Motors costing 10,000. Okay, you pay cash 1,000 and the remaining amount to be settled next month. Okay, that means to say next month, that means it's still outstanding. So you will debit your delivery rent 10,000, but you will credit your cash 1,000. The remaining 900 you will owe to Amrita Motors. All right. So open a motor vehicle account first. You put in the cash first. Okay. So you debit motor vehicle 1,000 first, which you pay through the cash. Okay, 10,000, 1,000. Okay. Debit motor vehicle 1,000 and put cash here 14 March, and then you go to your cash account there. Okay, 14 March, and here you put motor vehicle. All right, so we do one part first, and then the remaining 900. Okay, how are we going to settle the 900? You go to owing to Amrita Motor. Okay, so we still debit Okay, it's another motor is other payables. So we still debit to American motor vehicle 9,000. Okay, and the remit, then we will credit it to our American motor. The other payables, because we are not buy stocks. Okay, 9,000. Okay, so in your motor vehicle total is actually 10,000. Okay, we still get the full amount, but it's just even though we haven't paid yet. Okay. But we still capture the motor vehicle cost as 10,000. Understand or not? Okay. So this is what we call what? Accrual basis. Okay. Even though you haven't paid, but you still have to pick it up. Okay. So this is we learned it before. Okay. So 10,000. Okay. Okay. 14 done. 17. 17 sold 20 units of goods for 400 each to infants on credit term. Okay, this one is on credit term. So you credit your sales first, 200 times 20 units times 400 is how much? 8,000, right? Go to the sales first. How much is the sales? 17. So this one is a trade receivable in ton. 8,000. Okay, how we get 8,000? 20 times 400. Then we debit to in-bank account. It's not in-bank account. Okay, 8,000. 17. All right. Next, 18. Issue check 2,000 to pay for the owner personal life insurance. Okay, this one is a personal life insurance. That means this is a drawing. Okay, so you debit drawing credit to your bank. Okay, so go to this one. 18. Okay, drawings. What's that? Drawing is 2,000. And then you debit to drawings account. Debit drawings. Here you put that. All right. Finish drawings. Then 29. Bank in the check for 250 for commission receipt. So you receive commission. You will debit your bank and credit to commission receipt. Okay, go to your bank there. Debit. How much? 250. All right, and this one you put in 29 is commission receipt. And then you open a commission receipt account, put in 150. Okay. 29, right? Bang. Right? Okay, next one. 30th. 30th is you purchase 30 units of goods at 200 each from Grace Enterprise at credit terms of 30 days. Buy another time from Grace. Okay, 30 units. So you will debit your purchases on 30th March. Okay. Payable Grace again. How much this time? 30 times 200. 6,000, right? All right, so you will update here, Grace, purchases. Okay, done. Finishes. And last one is paid gross office equipment bill 60 by cash. Okay, so you will credit your cash. One is called office electricity. 60 is 60. Put to electricity. 60. Cash. Okay. Even ask Miss why Amrita Motor is other payables. If not other payables, even then you tell me who is Amrita Motor? Then what it should be? What? Trade payable. Even that's a question from the isn't it? Other we owing maybe is it maybe? Unless okay, what Shana's this what is this business? The business is selling what? Souvenir shop. You buy motor vehicle. Is motor vehicle is your stocks? Even? No, right? Trade payable is the persons that you owe him money, is the supplier that supply you the stocks, the goods. Okay? That means if you buy souvenir like Grace, you actually but I believe you buy some souvenir from Grace, so Grace is a trade payable. Okay? Whereas motor vehicle, you are not buying goods. Okay, goods means to say we buy and for resell. So other payables is for those not a supplier that supply you goods. So American Motor is supply. You owing him money. If you owing them money because you buy motor vehicles. So this is for other payables. Understand not even? Okay, now we have finished that. Next round, next week, next time, next steps is we will post it to the one by one, post it to the ledger. Okay, we have to close the accounts first. Okay, okay, go to the cash book now. We want to close the accounts here. Okay, for cash account, it's a balance. It's a debit balance account. Okay, it's an asset account, so it's a debit. So you will normally close it at the debit side first. Okay, can you help me to close up the debit side? How much is the total? 1,500 plus 3,002. You should get 4,700, right? And then you will put this 7,100 to this credit side here. Use the 4,700, okay, 4,700 minus all the credit item here, you get a balancing figure. This balancing figure, you should get 440, right? Okay, so this one is your, we call it balance. CD. Okay, close, carry it forward, okay? And then balance CD. Para is BAL is a short form, full, it should be balanced, okay? And okay, you same goes to your bank, you close up your bank account, total bank account is 64,950, all right? So you use the 64,950 minus all the credit item, you should get 49,950 as a closing balance, right? Okay, and then this one is a closing. Okay, you have to put 31st March balance, write it down, and brought forward. Okay, and now you go for another one. Capital, total up your capital. How much is your capital? It's 13,000. So here you put. be brought forward to next month as the opening balance will be in the credit side. Okay, so the rest like this one, you will close it very easily. Oh, sorry, 49. Thank you. Okay, so for this one, you will just very easily defer only one, all right, and just balance CD. 1,000, and then brought forward. Purchases, 16,000. First, this one we do not brought forward because purchases are those are expenses and income account we do not balance that, not brought forward. Okay, we will charge it to SOPL. Okay, so I want you to put SOPL. This one you put SOPL. Eventually 16,000. Only the asset liability equity you will go to you got balance CD and brought forward. Okay, because they have you continue capture that. Okay, for the purchases or income or expenses, you will charge your P&L. Okay, trade payable is a liability, so you have to balance it. All right, so this one is a liability, so we normally close the credit side first. Okay, 16,000 and then minus 10,000, you will get 6,000 closing balance. Here. Account 6,000. For sales is the income. Okay, so we do not carry forward and brought forward. Okay, so normally this one you will say to charge it to P&L. SOPL. Advertisement also you go to SOPL. This one you have to carry forward 50,000. And this is a liability. Okay, you brought forward as a liability. The motor vehicle is an asset, so you brought forward the 10,000 as an asset. And other payable Samrita is a liability, so you will carry forward to next year, the next month. Also the same, 8,000, you carry forward and go forward. Drawing is equity, so you will carry forward. Okay, here. Okay. And then the commission receipt and all this one is not going to carry forward because it's an expense, it's an income to you, so you just put under SOPL. Electricity also, okay, you will go to SOPL. Okay, so we have closed one by one already. Then all this figure, this closing figure is very important for you to transfer it to your trial balance. All right, so like here, your cash falls down, the opening balance, that means the closing, carry forward your closing and drop forward. So this one, this figure, you will post it to your trial balance as a debit side. Okay, so you post the 440. And then you post 1.1, okay, I just show you a few. Okay, so the bank, okay, you close in 49,950, so you will close. Okay, And the capital is 13,000 here. Right? You will post it to the account balance. Okay, the rest you post yourself. This one is no matter it's asset liability or purchases, all you will post it to here. Okay, after you post it already, right? So you will have this total. Everyone should get 90,000 pound 50. This one I think I already done for you, right? So no need to transfer now. So now I want you, now everyone do it now yourself. Okay, I already illustrated through SOPL. Now I want you to try, see whether you can get the net profit. Do it now, everyone. Okay, so you plug the figures, okay, the necessary figures, okay, find the figures here and put it here. See whether you can do the SOPL first. Okay. Kim Xian, what do you mean by 2? Huh? What does it mean by 2? 2 what? 2 what? Type wrongly. Which one type wrongly? You type wrongly, I type wrongly. Accidentally type, oh, okay. Jinan, what's wrong with the balance sheet? What's wrong with the balance sheet?
In the ledger there, what the bank account, the balance PD. Oh, sorry.
What's wrong? Huh? What's wrong with my balance sheet?
Oh, just now I saw 64950.
46955. Change already, huh?
Yeah. My mistake.
Yeah. So you're supposed to cancel this figure, huh? Finish doing or not? Quickly, I will do now. Check. I'll give you the answer later. You do. Finish the P&L. Okay. After that, you try your SOP. Anyone have finished gross profit? How much is the gross profit?
5,200.
5,200. Okay, gross profit come on, upper 3390. Gross profit sini lah. Is 5,002 betul. Net profit I sudah like, I already give No, net profit is 3390. In exam, I will not give you this thing one. You all have to fill out. So you have to remember the format. Okay. Suka tak suka mesti remember. Okay. If you are a accounting student, this format you can never forget. Alright. Okay. Let me check the answer for P&L first. See whether you got it correct. Okay, this is your P&L figures, correct? Everyone check, If you finish, then you Finish P&L, continue SOFP, yeah? You must try first, that only you know whether you can do it or not. So if you finish, you can check the answers. Actually, basically just transfer the figure from your trial balance to here, okay? Okay. Here, the additional capital, you can just put like that, okay? Some students say, teacher, I don't want to put 30,000. You can split it to 1,005, this one first, okay? 12,000 plus 1,000 also, okay? So this one, I think should be like this. My suggested answer is also good, okay? 12,000. And after that, you add 1,000. It should be like that. So that's because we got one time additional capital to it. From the beginning, you should have.
Miss,
Yes.
for the capital in trial balance, right? Is it recorded as the opening or closing?
Opening or
Closing in the trial balance.
we in the trial balance is closing. We will use the final tables here. Okay. In the trial balance, we should post this value.
Oh, okay.
Right. All right. But when we split it, okay, we will split like that so that we know during the year that actually has additional capital. All right.
Means that the value of capital in the trial balance is the capital as at 31st March, right?
By right, yes. By right, yes. If there's no changes, okay. If there's no changes and they already updated that. All right. But let's say just not like come back to the question just now. Like in the illustration, which one already? That's right. This one, right? Okay. This one we will assume is the 1st of January. Why? Because actually during the year there's no movement. Okay. That's why this one at the means to say we do not know and we assume there's nothing changed. Okay, so we will assuming it's brought forward from the carry forward and brought forward is the same. So I put it as 1st January. All right. However, and then during the year there is some additional, and this additional is not reflected here. It's not reflected in this 49. So I will put under additional 10,000 here. Then only add it. All right. So by right, because I put the 31st December right here, it will be very confusing because at the end I also have 31st December. So normally we do not, okay, we do not say that, okay, we do not show this as a as a 31st March, we will put its opening first. That only will come for the closing. Because this one, the closing capital actually comprises not only capital, it will still have the net profit and drawing. We still belum masuk ini lagi. Therefore, we will not say this is at the 1st December. Okay, so this part is only extract from the trial balance only, but not complete capital yet, because capital is comprises of another things. Okay, like additional capitals, net profit, and drawing. Understand? So you cannot put the 31st March, even though sometimes we extract it from the 31st March, but we do not denote as the 31st March. Okay, what I mean or not?
Yeah,
Because
yeah.
it's not complete yet. It's not complete yet. You cannot say this is the 31st March.
Okay.
Yeah. Okay, I will check your answers. Check your answers. Okay, so you can present like that, or you can just present this as a capital as a first. Because if I put first March, it cannot, because first March I only have 12,000 only. Right, look at capital. I only have 12,000, so I will put 12,000 like that. Okay. Okay, any questions? Okay. Yeah. Thank you for giving some reactions. Okay, good for physical class because I can see your face and okay, there's some reaction for me to understand whether you're okay or not. Okay, if no question, we stop here. All right. Hey, this week is a submission date. Or next week of assignment. Next week. Remember your deadline. Okay. Start from this next week onward, it will be very challenging already. Okay, it's very challenging. Don't skip any class, because next week we learn a very interesting topic. It's called accounting concept and assumption. Okay, this one you never learned it in SPM. Okay, because we don't teach concept in SPM. But yeah, it's interesting, but students always say confusing. So please come please attend don't sleep. Guys, any more questions? No, then I off the stop presenting. People can directly 13,000 can. If you want to put 13,000 can. All right, because it's assuming transfer out from trial balance. All right, no problem.
Thank you, Miss.
Okay, bye bye.
Thank you, Miss.
Can only submit through.
Thank you, Miss.
Thank you, Miss.